Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Kauli. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Kauli, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Kauli.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of welcoming Omar Ruiz. Omar Ruiz is with LeRu Investments. It's a private real estate syndication company. They have done several deals in Midwest, and he has been active in the space, believe me or not, since more than 15 years now. He has a property management company called Home Choice Property Management, and it is a residential property management company. And I want to welcome you to the show, Omar. I appreciate you taking time. And, it is a pleasure, Omar, when I have veteran guests like you who come on, and especially with your background, it's going to be a fun conversation. And, we're looking to love all your experiences and learn the best from you. So welcome to the show, Omar. Help us get started with, how you sort of came into real estate. What was your background like? Help us get started there.
Sure, absolutely, Sakar. Thank you very much for having me on your show. So early on, me and my partner, his name is Jeffrey Spin, wanted to get involved into multifamily properties and owning larger apartment complexes.
Sure.
And we realized that knowing as much as we can about the property management side of the business was really going to help us out to once we got into the ownership side of things. So we helped out a couple of people that needed property management here locally. They were actually trying to sell a property in the city of Riverside here in Southern California. It's a pretty well-known city in the Inland Empire. And they were trying to sell it, but they didn't have good financials at the time that they can produce to a buyer so that they can kind of vet the deal and see if it made sense. So, and we were hungry at the time to really, get into property management and all that. So we said, look, let's we can create a win-win here. We'll manage the operations. We'll find you tenants. We'll deal with the tenants that are there and respond to their needs. We'll get you some good financials there that you can produce to a seller, and and then you'll be able to sell the property.
Awesome.
That's how it worked out.
Awesome. So now, Omar, you came into the field. Was that doing the single family home flips first on, and then you took on the property management and branched into multifamily? Is that kind of how the path of progression was for you?
Yes, but we weren't doing very many flips. We weren't really focused on flips. The flips just kind of landed on us because, back at that time, and, when we were doing the property management was just before the recession hit. So we really kind of straddled that, from 2006 to 2008. So we really saw, the good times coming up, and then the change, and then the downturn. And there was tons of short sales at that time. I mean, that was all the short sales and REOs.
Absolutely. I relate to that, sort of the 08 pandemic, as I call it, I'm a realtor myself, and I can clearly relate that, all of our sort of the MLS, the realtor database was full of REO properties, short sales, foreclosures, you name it. That was only the name of the game at the time. And it took many years for that inventory to sort of phase out. And I think it's interesting that we are talking about that era here, Omar, is a lot of people, especially the newer investors, may not relate, how much the property prices had gone down.
Yes.
I mean, you could perhaps cash flow a property using the prices or the depressed prices at the time in some of the expensive markets as well, which probably you may not be able to even pencil a deal at today's prices, basically. Would that be a right statement, Omar?
You're absolutely right about that, because I remember very vividly, just around that time, we actually flew out to Dallas, Texas. We were looking at a property out there that, we already kind of were close on the pricing, and me and my partner flew out with one of our prospective investors as well. But we try to retrade on that one.
Mm-hmm.
And it's probably a good thing, because just right after that the recession came on, and I was looking at stuff in the city of San Bernardino, which is another city in the Inland Empire, where there was tons of foreclosures going on. It was the whole Inland Empire was like the epicenter of the subprime type of loans.
Sure. Mm-hmm.
And I started seeing some of these multifamily properties. The price per units were very similar to what a price per unit would sell in Dallas, Texas.
Wow. Mm-hmm.
Yeah, so I told my partner, hey, instead of taking a 3-4 hour flight, let's just take a 1 hour drive in our backyard and pick up deals out. And, we started small, with a single family home, but we always try to double up the amount of units with each subsequent deals.
Right.
Yeah, so like duplex, a sixplex, and 13, then 30, and it just kind of 70, and then it just went from there.
Awesome. Thank you for sharing that progression there, Omar. And now you mentioned, let's say, Dallas. Now you acquire deals in Midwest, as well as you shared with me in the green room before we started recording, right?
Mm-hmm.
Help us understand, Omar, that how are you, analyzing the markets, and maybe kind of going into further details that, okay, I want specific submarket, whatever, a Northeast or a Southwest of sorts, right? So give us some tips and tricks about how you evaluate some of the data to zero in on the markets and the specific submarkets.
Sure, absolutely. There's a combination of factors that I like to look for. I like to make sure that that there's a certain amount of population in that market. Now, saying that, I have actually looked at deals in what are
smaller submarkets,
very small.
Interesting.
But that's strictly due to the numbers. Okay.
Sure.
So,
okay. Sure.
But generally you want to have at least a couple of 100,000 population, if not more. If we get into like the between like 200 and 300 is a pretty safe market, because you market. And this can even happen in big markets, but you want to be careful to stay out of markets that have the possibility their population declines. Okay. Like a good example are like the Detroits out there of the world.
Sure.
Chicago right now is experiencing a lot of population decline. And in fact, on our property out there in Indiana, we would routinely get prospective tenants from Chicago because they were looking for jobs, and they couldn't. Yeah, and they couldn't get any jobs out there in Chicago. So the jobs were booming there in Indiana. So everybody was coming down over there. So jobs,
population.
That's a very important factor.
Got it. And going further details then, Omar, there is that how do you hone in on a specific section of a city or, submarket, as we call it? Do you use any like sort of reports, or are you maybe kind of consulting more on the advice of brokers of sorts? Give us some sense of what your experiences have been into, because like, I mean, a city, as we all know, could be like really big, and you wouldn't know whether it's a safe side of the town or not. So give us some intelligence as to what your experiences have been there.
Yeah. One of my census website, and now recently for 2020, they've just changed it because what you were able to do before, you were able actually to get down to what is called the census tract.
Interesting.
And what that is that every 10 years, when they get the information, which is what's going on right now in 2020, they're asking everybody to provide information. Now they've done it digitally, but before what they would do is that they would actually send people door to door, knocking on people's doors, asking them questions and all that stuff. And so they would break it up into census tracts. And this is something I learned at university, and I decided to apply it here in real estate because it was so helpful. But you were able to actually go on census website, and like you said, big city, the average income could be, whatever, $50,000, $60,000, $70,000. But, and, I'm sure, Sakar, you've experienced this as well. In certain markets, you can be on one street and everything is beautiful, perfect, and all that. Now you go, two blocks over, and it's just a mess. Right? You got crime, and all that stuff. So getting this information by the census tract, what I was able to do is actually see what the average incomes were in this census tract. And these census tracts are going to be more kind of block based.
Sure. It's all very granular, basically.
Yeah, extremely granular. So and it's broken up by like 0 to 10,000 income a year, which is very low. 10 to 15,000, I believe it is, 15 to 25, and so on and so forth. And I would see the percentages, and if the percentages for incomes that I believe were 0 to 15,000, if that's the highest percentage in that census tract, that would be a red flag for me, because that tells me low incomes are predominantly there. So you're probably going to have a lot of crime.
Problems there. Absolutely.
A lot of problems. Exactly. So that was a very important tool that helped me to get to the granular level as far as, whether the area was good or not.
Sure. Now, Omar, you are such an important guest with such an immense experience of property management, which in my opinion is such a huge key for your success going towards multifamily, right? Help us understand, Omar, that, what are some of the value add things that you've done in your properties and your assets, and how was your sort of experience of property management helped you to be more successful because you just knew better, so if you could maybe perhaps share some experiences of some value adds and some things that you have done in your career, but I'd greatly appreciate that.
Yeah, sure. Absolutely. In fact, on one of our previous deals, we actually, when we acquired it, you have some properties where the ownership pays the utilities, and some properties where, tenants pay the utilities. And sometimes it depends on the market. In this particular property, the seller was paying the utilities on it.
Interesting.
And so we kind of did a survey of what was going on out there, and we said, you know what, this is a property where we can actually transfer the utilities over to the tenants.
Wow.
And so that was a huge value add play there for us that saved us a tons amount of money there. And so we gave the instructions to our on-site management there to do that stuff. And also upgrades as well on the inside of the properties. And there's some things that you can do relatively low cost. Okay. stuff are things that people actually like touch that are tangible. Cost improvements that you can do that I like to do on the properties are things like ceiling fans. Ceiling inexpensive, and if you get the right ones, there's some of them that kind of have like that not the chrome but like the brushed nickel finishes on them.
Sure.
Because they're a big item, they're very visually I guess attractive there. So
Sure. They look high. The nickel finish itself looks high end, basically.
Yes, exactly. So that kind of gives a perception they're a higher value.
Sure.
Same thing with sinks. On some properties, you kind of see these cheapy little faucets, I should say, the faucets that there's some very inexpensive ones out there, but if you put like a nice little gooseneck one, that's chromed out, or that just, and they're not very expensive.
Sure.
Affordable, so I heard a long time ago, things that people touch, like the knobs, doorknobs as well. I heard said fixtures, the light fixtures as well. There's kind of a term out there that said the Home Depot style stuff. Some of the Home Depot stuff, can look very, very dated, very cheap, but there's some stuff also as well that if you just kind of take it just a little bit up, it's not going to cost you, another, $50-$100, but
sure.
It's going to give that perception of a higher value. And so ways to do upgrades now. Appliances are also a big thing. If you go with the trend now is going with the stainless steel appliances. Typically you would see the white appliances, and then the trend was to go with the black appliances, and now it's the stainless steel appliances. So it's always kind of going up. Another of the trends now is also with the flooring, they call it the LVT vinyl flooring.
Sure.
That's become very, it's got that wood kind of feel and texture to it, but it's not actually wood, it's actually vinyl, and it looks very good. So I've done that, and sometimes also, depending on the kitchens too, and it depends on the property too, Sakar. It's
sure.
If you're going to do a whole overhaul in the kitchen, all new cabinetry, fixtures, and all that, that obviously is going to boost the value there, and you're going to be able to get higher rents on that.
Now, Omar, what about any like exterior components, like let's say the landscaping, let's say the exterior painting, or perhaps that maybe the driveway and all that stuff?
Yeah. I mean, on the exterior, definitely. What I'd like to do sometimes is also kind of rebrand the property depending on what some properties have really weird names to them that don't really.
I think they were relevant in 80s, but perhaps, as the new population comes in and the demographics change around the area, I think it makes probably a lot more sense to, rebrand and rename them, right?
Yes. And I've noticed too that especially in Houston, Texas, we own some properties there in Houston, Texas. There's a large Latino population out there, a lot of Mexicans out there. So, one of my partners out there, he had some properties there that kind of had a, like I remember one of his properties was called Allegra Palms. So the Allegra kind of has like a Spanish connotation in there. So if you kind of, pepper in something like that, that's got a Spanish, it's not going to like sound completely, Spanish, but, there's a word that, that the Latinos say, oh, that sounds like they might, be more of those people there, then they'll be motivated to put in an application there.
Sure. You try to maybe appeal the property to a diverse set of folks, I guess, right?
Yes, absolutely. And if you can afford to do it, put new windows, because there's still a lot of properties out there that have those old aluminum, single pane windows.
Sure.
That absolutely boosts the value on a property. It's going to be quite more, costly. So you got to kind of factor it into your numbers, of course.
Now you have assets in many different states, Omar. Uh, do you like how do you manage that? All third property management? Could you maybe help us understand that?
Yeah, sure, absolutely. I always try to work with property management CPM designation,
Mm-hmm.
and a CPM, it's just initials that they put at the end of their name. It means certified property manager,
Mm-hmm.
and those are folks that have taken extra education and schooling and put in a certain amount of hours,
Mm-hmm.
because those are people that are focused towards property management. Okay.
Mm-hmm. Interesting.
Now, yeah. Now it's not always a total risk elimination, because I've even had to fire some of those guys. You know.
Sure. Mm-hmm.
So, but that's one way to at least reduce that risk there, because
Sure.
they just have better knowledge.
Got it. Got it. Now, Omar, with the COVID pandemic hitting, right? I mean, a lot of tenants have lost jobs, or a lot of folks have their hours reduced
Yeah.
at their jobs, right? So the incomes have been impacting, and I know, the collections in the properties are also sort of, varying depending on which month you look at, and it is going to be, I think, very hard to analyze deals moving forward, because you would have some choppy months of sort of the NOI during that time, right? So help us understand, like, like, what is your take on or like, what advice would you share for investors in the coming months who are looking at some of the deals and things like that? Or perhaps what you would also go back and, like, if a deal is presented to you, let's say in August, September, and that the pandemic just hit. So what are some of the things you can advise for folks going through this right now?
Yeah, certainly. You definitely want to see where your break-even point is, and
Hmm.
figure out what occupancy is going to get you to that point, because then that, at least, you don't want to go below that,
Hmm.
but you want to kind of see where that floor is there, because
Hmm.
um, that kind of tells you, when if people aren't paying the rents, and you just want to be aware of what that occupancy or vacancy number is really.
Sure. Hmm.
Okay,
Hmm.
so that's uh, right now it's still almost kind of the like the testing phase right now, because surprisingly, we've had very few people that have had actually issues with paying the rent. There
Hmm.
have been a few people that, um, in fact, um, just recently we had a couple that, they lost their jobs, but they communicated with us, and that's very important, actually,
Sure.
to if you can set the relationship from the beginning with your tenants, that they know that, as long as you communicate with us, we're going to be able to work with you. Okay, and
Absolutely.
as
Absolutely.
best as we can. Some people, if they can't pay rent, there's not much you can do about that.
Sure. Sure.
But
Mhm.
as long as there's that understanding, you communicate with us, we will do to work with you and help you out.
Sure, sure. Now, Omar, I know you've been having such a long career and a wealth of experience. Share with our listeners, Omar, that what is some of the great advice you have received over time from whether it was your fellow investors or other senior investors, or perhaps your mentors at the time. Give us some tidbits about what is some of the best advice you have received so far that has kind of stayed you true to your discipline and helped you in your career so far.
Yeah, sure, absolutely. And I've gotten tons of advice, and it's interesting because, actually, as the years have gone by, some of the advice, had to be upgraded, I guess. Because I
Uh-huh.
remember early on, um, the idea was, as far as the unit mix is concerned,
Hmm.
that you wanted to have more two-bedroom units in your property than one bedrooms. So
Hmm.
you wanted to have at least 50% two bedrooms.
Hmm. Hmm.
And the thinking was that, um, people in one bedroom units are going to be more you're going to have more turnover in those units. And sometimes that does happen, but over the years I've noticed that the demand for the one bedroom units in certain locations sometimes is even higher than the 2-bedroom units. Okay? And I think that has something to do with the changing of the demographics with the millennials and the new generation that they put off getting married. So there's more people living by themselves. Want their own. So that was something that early on. The other thing also kind of having to do with bedrooms. One of my partners, he told me like he didn't like properties that had too many 3-bedroom units.
Interesting.
Particularly if they were master metered.
I see.
Because what he would see is that the water expense was always higher. And it was just harder to control because I had so much more people taking showers, washing their hands, using the toilets. So that was an expense that he noticed early on. Now, considering that now, I'm kind of on the fence on that now because the way I'm seeing lack of affordable housing out there, I actually think that the demand in the future, and this depends how values go, but I think there's going to be more demand for 3-bedroom units, just as simply because it's going to be more affordable for let's say like a young growing couple, they got one a couple of kids there. It's going to be more affordable for them to rent an apartment than a house. So those are a couple of things that pieces of advice that come to mind and that I've had to kind of adjust.
Awesome. I appreciate that, Omar. Tell our listeners, Omar, how they can learn more about you and find out more about your company.
Sure, absolutely. I actually have a blog that it's all my learning on my website. If you go to www.LeRuInvestments.com, and the spelling is it's a LERU followed by investments with an S at the end.com. And the blog articles there, they're all stuff that from my personal experience.
I appreciate you sharing all the original content, Omar. It is rare to have, guests with such an immense experience, learn through the, hard knocks, gone through the downturns, and, coming on the other side and still doing deals by the way, so it is a pleasure to welcome you to the podcast, and thank you for your time today. I appreciate it very much.
My pleasure, Sakar, and I appreciate you putting this great podcast for people out there to learn from you. You're doing a great job out there.
Absolutely. Thank you. I appreciate it very well. And I look forward to chatting with you in future as well as, more deals you do. Thank you so much for your time today.
Absolutely. Take care.
Take care.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.